All right, hello, hello. Sorry about that. Of course, never fails. I always get like 12 messages right when we hit go. Um, all right, so I wish there was a ton to talk about today, but not really. Kind of slow. Uh, the unemployment claims number today is definitely an extra little pinch of ingredients and flavor, right? I mean, there was such a huge deal made of the 187. Oh my God, this is the lowest in like 30 years, right? Then they had to adjust last time, the 202, number down to 171, which again is kind of like, oh my God. And then this time it's 166. So, yeah, it's, I don't know. I feel like whatever the Fed says, believe the opposite is kind of where we're at with things. Um, yeah. Anyway, only thing, I mean, look, currencies is like dead flat. Look at this 7, -5, 1, -8, 9, and -6. Obviously, oil taking that collapse after yesterday's storage report, having a 5 million barrel difference. Um, that's a big deal. And then, again, Aussie dollar down a bit. Again, gold's kind of confused, like what the heck is going on. Um, again, everybody kind of knows what's coming, but not really seeing a ton out of the Aussie right now. And again, it talks about how, 19 minutes ago, they were saying that the Aussie dollar falls to significant short term support, so, there's people talking about it. As far as what we're going to hear, let me see if there's any additional headlines. Um, you know, I think this is interesting. Is the Fed behind the curve, right? Um, I love it. Inflation is exceptionally high, right? And comparable to 1974 to 1983. Um, he's an interesting guy because, again, a lot of the messages that they have, the Fed has sent is like, no, all members, we're a united force. Um, I feel like he is the only one that has any really true concept of what needs to be done right now, and is willing to make the statements and go with it. Again, you can always find this one, and again, if you click on this, it'll pop up. You know, the U.S. economy is still booming, right? Real GDP rates, he's talking about it. Core inflation is comparable. Um, and then I haven't read the whole thing, but I think his risk to inflation and growth is important as well. Like I said, I think Bullard ends up taking over the Fed. I think if not next time, because of course they got to just pick somebody based off of their gender. I believe when things start kind of equalize again, I think Bullard and he ends up becoming the main guy, one way or the other. I don't know. Maybe I don't know. Maybe because he's not considered the second in line, even though technically he should be. Maybe he's the next Treasury Secretary. You know, when Biden cycles out, um, maybe Bullard is going to be the next Treasury Secretary. Wouldn't be surprised at all, right? I wouldn't be surprised whatsoever. The other alternative is Jamie Dimon retires and Bullard takes over there. So don't believe the Fed. Um, it's not that I don't believe the Fed. It's just too many people that have political aspirations at this point. Um, is what the problem is. It's become too political sized or politicized, whatever the correct word is for it. Um, again, and if the Fed is going to be the political arm, then what do we need a Treasury Secretary for? Because that's the political arm, right? So yeah, yeah. And again, Treasury Secretary absolutely can be political, right? You're appointed, and again, you're part of like the cabinet and stuff like that. It makes complete sense. That could be the political one. Fed has to stay completely independent, unfortunately, and that's what we're not going to see because Congress, the Senate's like, no, we need to have more control over the Fed. Those rich people can't do anything with their own money. They shouldn't control it, right? Meanwhile, the Fed is banned from insider trading, but yet the Senate is not. So, yeah, I really hope they all get called out on their BS, right? I really hope that this new younger generation, the woke generation, will start calling them out. Like the fact that, you know, I'm waiting for AOC to be like, it's ridiculous that we've had people here for 50 years. It's ridiculous that Nancy can trade stocks on insider information. Like, yeah, I'm waiting for the younger generation to come through. I'm not holding my breath though. I'm just saying. Just so everybody knows. Um, Some pretty interesting data as well out of the ECB. ECB basically talking about how basically the uncertainty triggered by the war had temporarily halted and partly reversed the reprising of monetary policy expectations. So they're kind of talking about, hey, listen, the war is still going on, but it's starting to get bad here. A large number of members believe that the current high inflation and persistence, and its persistence, wait, it's not transitory. The U.S. said it was transitory, required immediate attention. So a little bit of a sway right now, and it's kind of like, all right, what does this mean? This is a large number. How many is things? Like, what's going to happen with this, right? So this is kind of a change, and again, not today, but it should bring some euro strength and some euro headlines. So, I mentioned by summertime, and then again a day later, we have some, you know, now we have some things to really talk about with the euro kind of strengthening itself. So that's kind of good. Again, the Fed minutes. Uh, I was really hoping they would do the right thing. Um, I love it. Many officials say that one or more 50 hikes may be warranted. Really, at this point, how can anybody say that one is not warranted? At least one, right? How literally how could you say it? Um, I just don't know how you could say it, right? No idea. I just I can't even make it up. Like I'm at a loss. Maybe one or two. Yeah, okay. I love this. All participants. That means that they want people to think that they're all on the same page. Obviously, they're not, because whenever you lead with all participant agrees that risk management is crucial, yeah, no kidding. Like this would be common sense, right? Wouldn't all citizens agree that risk management will be crucial in determining the right stance of monetary policy? I mean, all people with half of a brain, right? I feel like that's what we're dealing with here. But all participants that were there thought that, risk management's important in monetary policy. No kidding. And all participants emphasized the importance of remaining vigilant to the dangers of more upward pressure on prices and longer run inflation expectations. So does anybody with half of a brain? Right. So yeah, whenever they say all participants, you can tell that there's some dissension in the Fed right now. I love this. Participants generally agreed that caps might be phased out in over 3 months and somewhat longer. Right. Participants generally agreed. Yeah. So basically, yeah. Oh, here you go. 2 minutes ago, Fed about to start asset runoff at coming meeting. Right. Um, Balance sheet cuts will push long rates up. Okay. Financial market volatility reflects becoming accustomed to a Fed that must battle inflation. The Fed is about to start asset runoff. Okay. So we're getting the headlines now. That's what I'm looking for. Um, yeah. Look at that. He looks so happy. They always try to find the worst pictures. The other picture we had of him was better, right? Like this is like, why not use this picture? This is the one actually on the Federal Reserve Bank of St. Louis. This is his actual page. This doesn't look bad. He's like, yep, I'm a guy that has to look at numbers all day. And then what do? They find a picture here that it's like, yeah, yeah. I don't know. Some of the authors are funny, but that's good. That's great news, right? I think this is, again, this is the quantitative easing as we're raising interest rates. It's dumb. It's the stupidest thing ever. So going in tomorrow, we don't really have any big news, right? We have the unemployment change and unemployment rate in Canada. I'm wondering again. We're seeing really CAD weakness right now with oil being down in the 90s. It's down to like what 97. Um, Wondering if we're going to see a big of a pickup. Now it's not supposed to be as many people, as many people hired, but the unemployment rate obviously is a big deal. Uh, Again, we're not talking about millions of people, but it's not the same. But again, CAD has been CAD has been dominated by oil news, but they've had some good data. Canada's had some great data. Again, last time there was that enormous that it was supposed to be 132 and it was 336. Will there be adjustments to that? Yeah, it's probably adjusted down a little bit. I'm assuming, but I'm curious to see what the forecasted number versus the actual number comes in as. Um, yeah, I feel like CAD is getting to a place where they're going to start mentioning rising interest rates as well. And again, with energy and everything else, this is where is it? This is an article we got earlier about the earnings, right? After Biden decided to make fun of the ruble, the name, like, okay, we're gonna result to name calling, right? It's obviously soared back, right? It talks about how it's higher than what it was, right? It surged all the way back to where it was before he actually invaded. So the country's not dead. Talks about what is it, 321? Yeah, yeah. Bloomberg economics experts, the country will earn nearly 321 billion from energy exports this year, up of a third, right? Even though it's cut off from everybody else, they're still going to make 321 billion, right? Add in the fact that foreign powers are not going to let them. You're not allowed to pay your debt. There's point 0.6 billion right there. That again, we can throw another billion into things. Um, and again, they talk about in this article as well about how the country operates is in a trade surplus right now. So, even though it's supposed to be, um, you know, it's supposed to kill that economy, right? A current account surplus should actually be another source of stability for the ruble because they're in an account. They have account surplus. If energy prices remain high and major importers of Russian energy commodities continue to purchase, the current account should stay in a surplus. Right? He says the ruble could hit 87 versus the dollar. Right? Partly because of Putin's counter sanctions. Right? And again, Putin's not stupid. You sanction me, great. I'm going to counter sanction. He's not dumb, and they have every right to do the same thing. Right? Um, yeah. Look at this. This is just a week after the U.S. Treasury barred dollar debt, payments from Russian accounts in U.S. banks, an attempt to make Russia drain its domestic dollar reserves. You could do that, but they're making $321 billion just from energy, not even anything else. I mean, they have other exports as well. So, yeah, I love it. Interesting stuff going on. So, let's go into charts. So, I think the easiest place to start off with is the VIX. Again, VIX is up 1.445%. The indices are kind of split across the board. It's like, what are we doing? Is the Fed rising? Is the Fed not rising? What are we doing? Again, huge drop yesterday, and again, just the FOMC kind of wick back and forth, and then we're not going to raise interest rates, suckers. It just dropped. I mean, this thing. Look at this. This is a huge move in the VIX. This solid red candle, right, from 430 down. When people digested the statement, it was like, wow, that's what you're giving us. Wow. But then again, it has rallied up back overnight, partly because of some of the data out of Russia. So, two things I'm going to highlight, and then we'll go right into charts. One, this is actually something that I hadn't assumed. Right, my assumption was, with them starting to pull troops back and stuff like that, they're gonna, I always start from the beginning. The goal wasn't to destroy all of the Ukraine. I assumed what they were going to do was again they had solidified Crimea, and they were going to take the two other regions. They acknowledged that those two other regions, as separate entities. I thought they were going to go in there. They're going to mess a bunch of stuff up, and they were going to basically claim those two regions as part of theirs, or like kind of like puppet regions, right? That they were going to slice some more off. Um, if they could get the assurances that they wouldn't join NATO, it was a plus, right? It looks like it's there. When they have polls, it looks like from the polls I saw yesterday, a majority of Ukrainian citizens believe that they should join the European Union, right, for trade purposes and things like that to create legitimacy. But a majority of people did not want to join NATO. Okay, that they wanted to drop their bid and they didn't want to have they didn't want to be join forces with NATO. That's kind of at the end of the day. I mean, for Russia, I think that's what they wanted: more territory, a guarantee. Again, not necessarily a puppet state of the Ukraine, but if they're guaranteed not to join NATO, then yeah, you're good, right? And I don't think the EU necessarily wants the Ukraine as well. They got a lot of issues there as well with corruption and things. So that's what it is. Now we're again. This morning, Russia, Lavrov or whatever, basically said, "Hey, listen, we had agreements and things like that, and now all of a sudden we're going and remember, Crimea wasn't supposed. We weren't going to talk about it for 15 years, right? We agreed to talk about it in 15 years, and now they want to discuss, Donbass and Crimea. So it's like, I don't know. I don't know if it's they want to discuss it now, and it's like, wait, this is not what we talked about. We had agreements, and we were going to move forward with things, and now you're going back on it. Yeah. And now Russia's drafting its own agreement. I can't wait to see what that looks like, right? So, but yes, I mean, whenever you have an agreement and then all of a sudden you change it, I mean, things obviously change, right? But um, kind of wonder now too, is this going to be a long? You know, is Milley, General Mark Milley, is he right? Is this going to be a multi-year thing? Like, what other sanctions? I mean, we're trying to sanction every individual, but if they basically said, "Go ahead, sanction what you want, we don't care," right? Um, it is what it is, right? Why leave, right? I mean, they've been clear. Germany was clear. We will support them, but NATO will not get involved. If NATO's not going to involve, why not just occupy the country, right? I mean, in a war of attrition, the Ukraine will eventually lose. And how much money will the rest of the world continue to dump into the Ukraine before they realize that it's whatever. So yeah, interesting scenario. But again, the VIX is creeping up a little bit. The data today is great. I think it will, again, the increased VIX right here at the open, not surprising. Again, that number, it was such a good employment number, or such a good unemployment number. It's kind of like, what is that going to do for the overall market? Is it good? Is it bad? I mean, technically it's bad because the Fed is out of excuses they have to raise. And again, VIX being up a little bit, looks like all the indices are a little bit in the red right now. And again, as they kind of should be, because this is, I mean, you made such a big deal of 186, and then you need to adjust it, and then it is again. Like, what do you got? You got nothing. Oh, but the Ukrainian situation. Like, come on, really? Like, I'm not, for the lack of sounding insensitive, I'm tired of I'm tired of the excuses of the Ukraine for the reason why I have to spend twice as much for grapes, right? So the longer that this goes on and they do nothing, quote, because of the Ukraine, the more forces that, the more support for the we should not get involved in the first place are going to become empowered, right? I feel like we should obviously provide humanitarian aid and all that kind of stuff. But at this point, not inflation needs to be controlled here, right? OPEC has said we're leaving politics out of this and we're looking at numbers. We should look at numbers, right? So, yeah, yeah. Like I said, the $30 billion that goes into the defense industry or whatever it is, whatever they proposed, isn't going into my pocket. So, yeah, I'm not going there. Anyway, Aussie dollar. So Aussie dollar, pretty funny spike. We talked about this dropping down. We're like, listen, oh, go, 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 go. Pretty funny how when I removed that, it literally popped up, grabbed those same two levels, and came all the way back down. We talked about 74, 77 being the target, right? The first time we had some decent levels. And look at that. It hit our target, and all it's doing is just riding that target right now. I do think this is probably due for a little bit of a reversal. Not that gold has a lot of ground to stand on. And again, part of the reason why we're seeing Aussie weakness, we don't talk about it a lot, is because of the Chinese lockdown. Again, Chinese lockdown means, again, their manufacturing services are down. Whenever we have bad news in China, it tends to affect the Aussie because the Aussie typically relies upon China as a source of kind of selling, right? They sell a lot of resources to China as their expansion goes. China locks down, they're not expanding. Weak China is weak Australia. Okay, so that's kind of why we're seeing it. But again, where is it? Yellen actually, where is it? Lagarde tested positive, by the way. Yeah, I mean, here's the data basically talking about how, listen, we need to provide monetary support. We need to raise expectations. I'll tell you right now, China loves this as well, right? Um, they love the fact that they can, do policy rate cuts and things like that because it makes them weaker, which makes them more of a target for people to buy things from them, kind of like Japan. This is great. They're all on this. They're like, this is great. This is the appropriate time. We need to boost our economy, right? Citing worsening, intensified in some cases, and again, they're battling a COVID spike, but it's Omicron, so it's not like a lot of people are dying from it. Where the heck is the Yellen thing? Yellen actually mentioned it as well. Here you go. Yellen calls for crypto regulation. She's not sure what that means, but taxpayers should receive the same type of tax reporting on digital access transactions that they receive from transactions in stocks and bonds, so they have the information they need. I agree with that. Yeah, look at this. Says government regulation is needed to police the proliferation of cryptocurrency and other digital assets and to ward off fraudulent and illicit transactions. Right? Again, Putin said we will just use Bitcoin so we can bypass sanctions. Again, yeah. I mean, she's so obviously she's where the heck? I want to know that. Basically, Yellen made a comment yesterday in her little speech about, let's see, Fed minutes. Here you go. Significant risks to Chinese financial system, right? Now it's funny that she's mentioning including the property sector. We've heard nothing about Evergrande, right? But yeah, the slowdown in China's property sector would weigh on China's growth outlook and other have global implications. I think again, I don't think their property aspect is going to be the big deal. That's not necessary. I mean, they could say basically the contracts for energy because everybody has blocked Russian oil. We're going to get that. We're going to get a 25% discount on oil. The money we saved on oil, we'll just buy those things and they'll be state run. They can get around the property sector. That's not a big deal. But again, the significant risk to their financial system, again, more with the lockdowns and doing rate cuts and how to stimulate their economy. Again, going into a recession, being a country that produces a lot of things, they obviously get hurt when the world goes into recession. With Europe officially going into a recession now, basically, that actually hurts the Chinese financial system because it lowers their exports, right? Um, so she's right in that sense, but the property sector is not. Yeah, I don't know that she's on par on that one. So anyway, that's why we see weakness here. Again, there's probably a bit of a retracement on this one. I want to see it go higher, and again, we didn't get the overall kind of reaching. We said this was going in one and two directions. We didn't get the. I wouldn't say that the dollar comments were. It wasn't the strong dollar comment we got, and that's why we had this immediate spike up again. But at the end of the day, something still is going to happen. We just don't know what. So that's why we had the volatility. But it wasn't 0.25. Like I said, that raise was not. We're going to stay with 0.25 because of X, Y, and Z. And I didn't know what X, Y, and Z was, but yeah. So something still is going to happen. But I would say we're lower end of the curve. Look long for Aussie dollar, Aussie yen. There was the break that we talked about, breaking through basically 94. We got it. You see there's a little bit of a spike back up again, kind of finished the trade off. There's a little bit of a pullback. We talked about a target of 92.50 yesterday. And again, I'll continue this across. You can see that right there, it literally is riding right on the same piece. It's actually found a bottom and it started to push back a little bit. I think in this case, going across to some fibs, you can see that we do, right where that last pullback was for the FOMC meeting notes is right at the 50% retracement. I'd say it's probably the upside target. Again, we do have a higher low at this point. We'll see if we can punch through and get a confirmed higher high for an uptrend for the Aussie. But just like the Aussie dollar, I think both of them are a little bit overbeaten at this point, and we'll see if we can push a bit higher. But again, Target got hit on this as well. Full retracement of the parabolic move. And again, it's riding on top of it. It's the same buyers that shot this higher in the first place. So hopefully you guys were able to grab that one yesterday as well. Euro pound. So Euro pound. Interesting enough, we had these two levels drawn, and we mentioned that this is it's a tested level. It's been hit a few times, but never really probed deep in there. Funny enough, that's right around that 83.20 mark. We talked about 83 being a big deal, and that's what it kind of dropped down to for the European Open. Kind of base that is now rallying back up, and the reason it's rallying again because of the statements made from the ECB about, hey, listen, summertime, summertime, summertime. But again, right now, if you pull the fibs down, you can see we're just going off the 23.6. It is a level of basing as well, right? There is this level right here, and it was confirmed. If you pull the base here where the drop happened, it is confirmed. So, is a potential trade? Sure. Yeah. But I think for anything else, it should have been more of a profit target for you. Reason why it should have been a profit target is because, again, the trade was more or less once it started the base down here, you're like, oh my God, it's sitting on a level, it's basing, yeah, it's having a hard time. Again, kind of a parabolic move down. It's the biggest candle that we had from that 2 o'clock open this morning, right? This, right? Parabolic move down, sitting in a zone. You're like, yep, can't go any lower. Once we put this air here, you're looking to retrace. First target should have been here. Oops. First target here. Second target, obviously, the opposing zone, right? There's your first confirmed zone up there. And again, it just happens to be the 23.6 where the reverse is coming. So would have been target two for this. I think all the news was great for the euro today. I do think this rolls back a little bit because I don't think the pound is inherently. I don't think it's inherently messed up. Like I don't think it's collapsing. Do we have pound news next week? Let me see. Non-pound. Yes. Boom. OPEC meeting was on Monday. That should be interesting. April 11th is my sister's birthday. CPI next Wednesday. So it looks like pound should have an interesting day next Wednesday. Yeah, I'd say it probably comes back down, but ends up somewhere probably in this 30, or I'm sorry, 83.40 level. Again, as their market is starting to close to the day, I think it'll kind of calm down a bit. And like I said, if we get any bad statements out of, Russia, that should also send this to the downside because, excuse me, that news will be bad for the European Union first. Okay. Euro yen. So Euro yen took an interesting kind of run yesterday. So as you can see, actually it's not even yesterday. Basically, we just did nothing but kind of base in here. We rallied back up to an area of sellers, right? And I'll remove this now. We don't really need it right now. Our targets were hit here. Targets were hit here. We can remove that now. We can remove that. You can see that if I extend this across, right? We ended up tagging that target uh, at 5 o'clock, 5:30. Um, let's see, what do we do with this now? We're gonna put. Sorry, I was trying to get that adjusted. Hmm, see if we go. Yeah, so I was kind of wondering if we were sitting right there. Hmm. Trying to look for the next level. So obviously we got a level sitting right here. It's kind of been front run twice. Really from their 5:30 reversal, right? Their 5:30 reversal is right here. Okay, very similar to our 10:30 reversal. Um, hmm. I'd say at this point, I mean, again, we know we have buyers at 134. We marked that off yesterday. I'd say at this point, I'd be looking for shorts. Again, great European news so far, but now we're going to have kind of the retracement of it. It is a level. It's kind of been front run twice from there. It's not the best of levels, but there's not really any buyers that we can see in there. I would say probably a rollback down. It's about 65 pips. Again, it would have to kind of grind through it, but I don't really see much else in there that I'd be willing to kind of take right now. Again, if you take like this last peak up here down, obviously it pops up at the 50. That's why I said you can kind of, really, when you talk about kind of areas, right? Again, I could draw from here, draw from here. Eventually, I'm going to find a 50% retracement level. But a lot of people are going to use this as the last big push, right? Because this is where you really had the big collapse. I mean, technically, this would be the full retracement back again, so you don't want to do it from that line. But the next big burst down would be from here, which again brings it up to that 50. So again, if you're short, you're probably in a fine position. Would I get short now if you're not already in? No, not really. It just doesn't make a lot of sense. But at this point, I think it. Again, we'll see what this base does, but I think this rolls back down. I would be looking for buying down in the 134.42 area. Again, depending on what we do with the open tomorrow, if we're there at the open or if we do the same thing where we drive down from the open into that level, I'd look for, you know, I'd look for something around there for buys for tomorrow. Okay. For Monday, right? Well, actually, no, I'm sorry. It is Thursday. Yeah, it's Thursday. For tomorrow, right? Would I use that? Probably this level. Yeah, it's about 15 pips. So not a bad level. 134.42. But like I said, we have a confirmation now. We know it's been a pop twice, and we got a confirmation. So I'd look for it to roll down today and pop there tomorrow. Euro dollar. So euro dollar, we were talking about a rundown, and we kind of got it. FOMC kind of gave us that quick spike, and I was like, wait, what? And then, right, again, and it did tag the 50%, and then we've now hit the 50% two more times. So do we normally use it multiple times? Not really, but it's just funny that that level's been kind of a rock solid level. Although you can see it's finally pushed over, so it's definitely not something you want to use again. We were looking for 108, right? 108 flat. We got down to 108.65. Okay. I thought we'd get a little bit more. Um, Obviously, what kind of hurt this one was again the European kind of confirmation. All that data that came out from the ECB has really driven this back up again. We're seeing it reverse now, kind of how we're seeing the euro yen. I would say again, we don't really have great buyers, at least down till really the 108, 108.30-ish level. If you were looking for something more near term, you could make a case for saying, well, wait a second, look at this. This is a good zone right here. Yeah, I like the formation of the zone. It's a level that was tested a few times. So the big question is, have we reinitiated a new level? It's making a run there now. We got about 21 pips more to go. Could it be a reversal level today? Maybe. I don't know that there's really a lot of news. Let's see if there's a headline that's helping this right now. NATO members have agreed to strengthen support for the Ukraine. Yeah. I want. This is a very interesting case. How much money, like, what is the value of resources, like weapons? What is the value of resources and weapons given to the Ukraine thus far versus the value that has been lost by Russia? Right? I'm curious to see if anybody will talk about that Because look, they're gonna, we've agreed to strength and support. All right, you've said you're not going to get involved. You're not going to go over. Does strength and support mean you are going to attack now, or does it just mean you're going to give them more weapons, more training, more everything else? Right? Um, doesn't really give us a whole lot in that one. And again, that comment is probably why we're starting to see this collapse a bit. Like I said, if there's the need for more support, not necessarily the best thing for Europe. And again, could we have a reversal from here? I think it's probably a decent level. It's all right. It's all right. I don't want to say that it's the best thing out there because again, we have been there a few times and we know we got buyers below it. So really, I mean, if you need something, take a confirmation bounce off of it. 1030 if we can get all the way down there. Okay. But I would not use this level up top. I think the next level comes up to is the 78.6. That was where the pull off was. That level is approximately up here at 109.61. But again, super easy FOMC based trade. We pulled back up. And again, whether you did the 50 or didn't do the 50, again, area sellers, bam, bam, and obviously it's pushing down now. Pound yen. So pound yen. European session, send it down. 5:30 reversal in the morning, right here. Went right back up again. Ran into the same sellers, and we've pushed back down again. And this level has been pretty rock solid up top at this point. It's been pushed, so it's not something I'd be willing to take any shorts off of. But at this point, kind of hard to really say that it wasn't a good level. As much as I'd like to say, hey, this was an easy 5:30 trade, it pushed lower. Yeah, it's a basing level. If you were really aggressive and you wanted to play a reversal time frame, you could have done it. Um, I think it's. I think it's. I think this is a scenario where it's kind of hindsight is 2020, where you can make the case and say, yeah, look at that. That's it. 5:30. Yeah. If the chart was here, if the chart was here at, let's see, let me get it dead on. 5:30 is there. From here, would you be looking to trade it? Probably not. Right? So it's easy to say it now, but like, yeah, it was absolutely long. Look at that, 5:30 reversal. But after seeing it spike all the way down into this level of basing, probably not something that you would look to trade. But again, it did reverse, came back down again, and again, justified for the most part. Obviously, this is yen strength coming, and we're seeing on multiple pairs. If we can come through and break, I do think I think we have the ability to come all the way back down into this. Actually, that's not the right one. I do think we have the ability to come back down. Question is, again, what kind of hiccup are we going to get in this level? I think is really what we need to watch out for. Obviously, if you mark this level off in here, you can see that's what we bounced off of. I think we probably have a hiccup. I think we probably come down, and then the question is, are we going to base through it? Right? Are we going to sit here and base through, or are we immediately going to slice through and use this as a Harry Potter trade? I do think there's probably a Harry Potter trade here. It is a 65 pip mover, so there is probably enough range there. Let me see. Do we have a 1 to 3? We should. Yeah, we have 1 to 3. So we do have the room coming through that level. Again, little hiccup there, but I think probably this goes a bit down. So I don't know if you guys can hear Kip coughing in the background. He still has his cough. It's kind of progressed a little bit. And when he has like a big cough, it's like that. Ooh, it's like he's got his little. I don't want to say creepy cough, but he's definitely he's still feeling it. So, but the doctor's like, yeah, just keep watching it, make sure it doesn't get any worse. I'm like, okay, thanks for helping. Um, so, I think this one comes down. Again, we are going to get a confirmation pattern in this one. Just don't take this blindly, but look for a confirmation pattern coming through the bottom. 161.25 ish. Pound dollar. Okay, so pound dollar. There's the level we had drawn. There's FOMC. We came up and grabbed it, came all the way down, hit profit target. If you didn't get it for FOMC, you got it again at 3 o'clock this morning, and it's pushed back down to 130.50, 9 or 130.60. So again, same trade from yesterday. We were sitting here, right? So if you didn't get the entry yesterday, obviously, if you did, you're out. If you didn't get it, you got another opportunity at the European session today and drop down. Now, I'd be cautious with that level because, again, we do have 3 touches, and this went very, very deep into there. So there's only about this much space left in that zone. So would not be something I'd be willing to get into again. But if you look to the left, there's a bit of a racetrack. So I would say at this point, again, after 2 short positions, there's your one, there's your number 2. Right, there's your number 2. We just broke through 1 to 3. I don't know when. Like I said, I have no idea when it comes through. Yeah, buddy. I think this is the next cycle that we look for. And like I said, I don't know when it's going to go through, but again, this is one of those ones you need to set yourself. 1 to 3 is right there, and again, not even at the target. Um, Horizontal. We're actually gonna put an alert on this one. Green. Add an alert. HP. Whoops. HP long confirm. Not this bad at typers. I'm typing it at an angle. There we go. So right now, like we mentioned yesterday, we're looking for 130.20 is where we're looking at. Again, we gotta chop through this zone. It's been an area. It was a target. We've hit it obviously multiple times at this point. So yeah, we'll see. You know, fib wise, I can take fibs off. I don't necessarily need the fibs at this point. You know what? I'm gonna mark off fibs for here though. Change this yellow. Good the hiccups, buddy. I'll leave it there for now. It's fine. We'll probably go lower, but again, area of buyers that we're in right now. Dollar CAD. All right, so dollar CAD driving back up again. We talked about how 125 was great. FOMC literally shot this thing back and forth. Um, Funny enough, if I run it up to where price is right now, the 50 comes right back in at 125. So again, we keep going from 125, 124, 125, 126. So don't tell me there's not bigger forces involved in this one. Look, 126, 126, 125, 125, 124, 125, 126. Yeah, I think obviously with oil collapsing as much as it has, oil's at $96, right? 96.60. I mean, I hate to say that oil's low. It's like, yeah, this is a low price, but I mean, it's low compared to what our recent highs have been. And again, 6 million or 5 million barrels of surplus. It doesn't really bode well because people are not spending money because it's too expensive. Um, I think dollar CAD's got an interesting spot. I think I like with this rallying. I think the way to play this one is to, with the news release tomorrow morning, with this 8:30 news release, 8 o'clock tomorrow morning, jump online, look at the charts, and kind of see if we formed any type of a base, any type of a top. With oil continuing to collapse, I don't know how far oil can go today. I think this has the ability to go higher, right? I think we break through. This is a level. We knew we have two here, right? We knew this was kind of like a generalized area. We know we had one up top. Looks like we've broken through this bottom one finally. And again, that one already got cycled through. But the last time the price was up here at 25.94, right where we're at right now, this is what it ran into. So, we definitely know it's an area that we got to chop through. And again, area here, little area here, little area. So there's like three areas, right? There's an area there, and there's an area there, kind of all stacked on top of each other. I would definitely say any type of halting, freezing, anything in this area right now could be the opportunity and could be the top for us to take this short tomorrow. Again, it is a news-based trade. It doesn't actually kick in till tomorrow, so we got some time. Obviously it's about what 20 hours from now. A lot can happen from now till then, but look for some type of topping to happen somewhere in this range. And again, we're looking to take this short tomorrow morning into the news. Dollar Swiss. So still have the Harry Potter, still there. Didn't know if it was going to do anything. And as you can see, we had one little FOMC spike coming down, and then it was kind of like, well, wait, what are we doing? So are we raising? What are we doing, guys? Are we raising? Are we not raising? What are we doing? The dollar Swiss has no idea. So just goes to show you that the statement yesterday wasn't good, wasn't bad. It really didn't tell us anything, and just goes to show you where the Fed's like, hey, the transparency is at an all-time high. You're either all complete idiots or you have no idea what you're going to do yet. Which again, showing us no true movement. Again, this one tends to be less political than other pairs, but again, not so much now with the Swiss taking, doing sanctions as well. So, but yeah, look at that. For all those guys, I mean, let's see. If we take top to bottom, 28 pips. Woo! It's flying. Reality is, actually, I don't think I had dollar Swiss up here. Yeah, minus 7 pips in 24 hours. But even look at this yen. Look at this. Nothing. Right? Nothing. It's horrible. Dollar yen. So, dollar yen. So we did end up hitting that trigger, but you know what? It didn't qualify, right? We're always looking for a drop below and a base and then a pullback, right? It spiked it with FOMC, came back up again. Spiked down again, came back up again. And we're really in the same exact spot that we were yesterday. We knew we had sellers up top. So again, this one, this triggered, but it didn't give us the second piece of it. Remember, this is just an alert. If price breaks it, send an alert. That's why I'm typing, you know, look for the confirmation. We're always looking for the pullback, right? That shows us where the trap is, right? This is the trap, right? We're looking for the spring of the trap. We didn't get it. So again, goes live again, a break of 123.50, looking to go down to 122.91. Again, all we're doing is stuck in 24 hours. It's really done absolutely nothing. 7 pips in 24 hours. So really not a lot of that we can trade there on this one. So wait for it to unfold. I don't need to look at the charts, but I can tell you right now, Bitcoin at starting at base, it's not doing a ton. It's up 1% from where it closed yesterday. Ethereum up a little bit more, but I mean these charts literally look almost identical, right? Clicking them, they're almost exactly the same, right? The comments this morning obviously don't help as much, but again, overall, dollar doing what it's doing right now. I mean, it's up just a little tiny fraction. All the news so far has been great for Bitcoin and Ethereum and cryptos in general, right? That indecision, people are like, you're going to raise it, not raise it. They were getting beat up because it was definitely going to raise. Now we're seeing it green because you're not going to raise it enough. What? What? Very, very weak type comments. TLT, obviously, like I said, TLT tends to be a bit more sophisticated traders. This is higher money. They know the price, and they know that it is coming. That's why we saw the huge gap. FOMC was like, wait, what? Bonds actually rose a little bit on that weakness, but again, we know that it's coming. Today's number, put it this way, I don't want to say smart, but rich. I'm going to say rich. Rich traders that are dealing in the bond market are looking at this data and going, "Holy crap! There's like this is insane, right?" They're looking at going, "You made a big deal at 187. You should be making a huge deal. This is being 171. That's even better, and then 166 is even better." And bonds are like, "Wah wah wah." So again, I would still maintain the short bonds anytime there's a rally up. And again, yesterday's a perfect scenario. Rally up in bonds, right? Any type of rally up in bonds is a buying opportunity. There are, obviously TLT. You can do, traditional options on it. I think provide opportunities to get short. Okay. And again, rally back, big push down, rally up, gap. Big push up, gap. Big push up, gap. Big push up, drop down, right? Again, this was kind of rising, but it's kind of funny. Up, gap lower, up, gap lower, up, maintained, big gap lower, right? Up, gap lower. So this one likes the gap lower. And again, now it's with the data, it's there. With Taylor, are you buying bonds or doing options? No, you're doing an option. Basically, it's an option on. It says over here. It's the iShares 20-year Treasury bond ETF. It's an ETF, so you trade it just like a stock. So you're doing an option on it, right? I'm actually not allowed to trade them, Carol, because my wife is registered. So, yeah, actually, I could probably do. No, I don't trade the VIX or the Dixie. I could probably. I could probably talk them into letting me do TLT. But it would be a discussion that I would have to basically sell to compliance about how I'm allowed to do it. But typically, when you work for firms, you're very, very limited on what you can trade. Um, ETFs are sometimes the exception. I haven't checked with her firm, but I know they were kind of like, is he, what trading is he doing right now? Currencies, it's because it's not like what they consider a manipulated or a manipulable. There is no insider information with currencies. Typically, firms will allow you to trade currencies. Like when I was at Wells, I was allowed to trade. I fought them. Compliance is like, nope, you can't do any day trading. I'm like, wow, really? And I fought them, and I was given permission to trade currencies when I worked for Wells. I was the first advisor to be given permission to have an outside brokerage account from Wells. I just said, obviously, my statements had to get sent in, but they were like, wow, how did you get this through? I was like, well, I fought them and talked about how there's no insider information in currencies. There's no reason why I couldn't trade it. And the fact that Wells doesn't have a desk, there's no way I could do it. So it's not, it's not proper for me to be banned from doing it when average citizens can. They're like, you know what? You're absolutely right. So, but typically anything in the stock market, they get very like, no, 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 very bad. And compliance is easier. It's just easier for them to say no. So, yeah. But no, you're not buying bonds or you're doing options on it. It's an ETF. I mean, you could buy it like a stock, but just do options on it. The same reasons why you don't want to buy stocks is the same reasons why you don't want to buy TLT. Just do the options on it. It's cheaper, leveraged, better risk, right? Better risk management. Yep. All right, so let's go up to oil. So oil. So yesterday you can see, man, we called obviously when we drew this, we kind of called the top on it. Um, look at that. We called the top on that one. And interestingly enough, what did it need? When we go to, even go down to a 1 minute. I love this. This is like my favorite part of it. Or it's like, oh, it's a 50% retracement. I don't know. Was it a 50? Or was the 50 just a confirmation for where the zone was? Because we had the touch here coming in, and that's why we drew it the way we did, right? We drew it there, and that's where the touch came in from the confirmation. It sliced through the 50 and needed the what? Supply zone, right? But again, we were out almost immediately on this trade, but you can see that was really the yeah. I don't want to say nail in the coffin because it's still $96. But look at that. Boom, 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 all the way down had you been short from that one. I mean, um yeah, look at that. Free fall. And then really it stopped at FOMC. That was the funny. I mean, again, the oil market's at 230 as well, but it kind of stopped at FOMC, and it's like, well, what the heck do we do with this now, right? We got 6 million surplus, or almost 5 million surplus, off of what we predicted, right? So I mean, it's down, 1.4. Natural gas still grinding higher, Um, I'd say I think oil's an interesting spot. I think right now, and look at this. We talked about look at this, the bottom. We bounced right off of it, and then it became the top, 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 top. Um, my opinion of oil right now is, with everything going on, I think it's great that they're trying to lower the price of oil because they have to, right? Because of politics. Um, even with the prices down here, we know that Russia's making billions, right? Here's the thing about the Strategic Oil Reserve, right? It's only for 150 days, right? It drains a substantial portion of it. We have to replace the Strategic Oil Reserve. That's why it's there. Um, so it's going to have to be, so eventually they're going to stop doing that, which is going to jack prices. Then they're going to have to buy more to replace it. So while I think this is a temporary reprieve, I think that oil, I mean, again, my 6 month outlook is it's probably higher. Um, especially, if we're gonna ratchet up sanctions again, right? It's like, guys, I don't know, what is it gonna take? Like, we've been it's like, I don't know. Like I feel like they keep holding sanctions in reserve. Like, I don't know, did they feel the first sanctions were gonna work? No? Then I don't know. Um, the fact that every week we can ratchet up the sanctions, right? It just surprises me. Like, why didn't you put the toughest sanctions in from the beginning? Maybe if these were the sanctions, maybe how many people's lives could have been saved if you just put this hard of a sanction from the very beginning, right? But no, they always got to hold some in reserve. Um, I would say for oil, I would look for good basing opportunities to go long. I think fundamentally it has more reason to go up. It's nice that they want to manipulate it to bring the prices back down again. Maybe we can get into the summer, but like I said, I feel like Mother Nature always loves to get involved. I feel like there will be a hurricane or something that will affect supply. Um, and again, all the money that we're giving away, could that all have been invested or provide something for us to become more or less energy? The reality is, Biden talks a good game, but the reality is they don't want us to become independent of fossil fuels. They just want us to use the fossil fuels that they want. Um, you know, think about it. What's the value that we could put on 150 million barrels, right? Think about how much money that is. Instead of just us releasing it and sending it out there, think about if we invested that much just into changing our infrastructure from fossil fuels to wind, solar, hydroelectric, right? Obviously, global warming is matching up hydroelectric, but there's a lot of things we could do. So I think getting bullish is fine. I think finding the right opportunity here. Like I said, it's a bit choppy because this is where kind of all the war stuff came in. Right now, I don't have a confirmed kind of level all the way down to 94. Do I think $94 is going to make people drive more? No. But we know the number one thing that people are doing is not driving as much right now. So I think the prices are lowering the demand, and that's why we're seeing a surplus because inflation is too high. But until they raise interest rates, inflation's not going anywhere. So hopefully that makes a little sense. Natural gas. So natural gas is pretty interesting. Again, we did turn off that 640 yesterday. We dropped down, and it's technically considered up from where it closed yesterday. Um, we talked about the levels here, but there was nothing really clean and bursty. Our target was, 611. I'm sorry, 613. It kind of hit it. We've just chopped back and forth through it. Um, I think the hard part with natural gas is, again, based off the geopolitical nature of it, drawing top to bottom, we know that we do have the 50 sitting right here. Whoops. Do we pull all the way back down to where that 50 is? There's a level there, and there's a nice little push off of it. Um, problem with this one is I feel like we're one headline from the spiking back and blowing through 640. Um, it just, like I said, we can stick at the Russia as much as we want, but I feel like once Russia has had enough of us claiming these victories, right? And again, they are making a ton of money off natural gas, but once they're like, nope, we're going to block it, I think Russia is the one that pulls the plug first before we, again, having worked for somebody that is Russian, again, they will burn down the entire ship just to stick it to you, right? Um, I think once we officially get to the stance and sanctions where we have like, that's it, we have a solution, we're going to block it within 6 months, we're calling it. I think Russia is going to be like, oh, no, no, you don't have 6 months. You have 6 days. Ha ha ha. And they're going to pull the plug. And then I think natural gas goes crazy. So again, natural gas on an intraday level. If you're looking for longs, I think there could be something decent around this 595. Once it breaks the six mark, it will be a big psychological number. It's at 603 right now. I think you take a long opportunity north. Gold. So gold is trying to rally up, and you may say, well, why is gold rallying up? Well, right now the Fed has not given us any reason why we should be shorting gold. And I tell you right now, there's FOMC. You may say, well, wait a second, why did it go higher? You said lower. Well, I mean, it's a pretty decent reason why. We had to draw on the aggressive stance on it. And actually, I'll remove this so you can see it. Remember, I drew the two levels. If I remove the red level as the aggressive entry, there was my conservative level that got hit. So why is this higher? Because what did FOMC say yesterday? Yeah, there's some members that think it may be worth doing point two, 0.5. It may be. There's no conviction in that. And again, every reason in the world why gold should be long. Now, silver's a little more choppy, right? And again, as it should be, because it's like, wait, is it good? Is it bad? Is it not good? We did tag the 50% earlier this morning at about 8 o'clock and rallied back down again. Once that 8:30 data came out, I was like, oh, no, they're going to do it again. And now we're kind of seeing a fluctuation back and forth. I think silver does try to catch up. I do think, again, it's only hit twice, and again, it hit. It's a lower high than what we saw before. I do think this 45.50 being a psychological level, it will tend to have more problems with it. So again, I would actually probably looking for more of a short. Once it slows down, again, I think silver is definitely the weaker of the two. It is right now anyway, and I do think when gold runs out of steam. But again, gold has every reason to go higher right now. And look, we touched what 1915, and we're at 19, $15 in a day because the FOMC is just being so weakish on what needs to happen. And again, nobody wants to rip the band-aid off, but again, we're at 40-year highs already. We're already see, you know, yeah, energy prices are going down because people are refusing the drive, but people are also going to stop buying goods and services, and we're already seeing them not use restaurants. Like, how many things have to close before everything is just an Amazon pickup, right? Right. So yeah. And that's gold and silver. As far as the indices go, again, VIX is starting to creep up. Let's see what other, nope, NATO is the last thing. And again, NATO getting, you know, harder sanctions. We're going to get even, we're going to support them more. Great. Send them another, 100 billion and weapons. Like, I don't know. I feel like at this point, it's kind of, you know, have they, like what's the total? Like, are we spending twice as much money to stop Russia as what Russia is losing? It's kind of the big question. Um, And is that Russia's plan? Russia's like, this is not bad for us. Yeah, you put sanctions, but who cares? Whatever. You're going to put sanctions on us anyway. Sanctions didn't work for China. It's not going to work for us. Is draining. I mean, at the end of the day, all this does is put money back in the defense. The people that grease the wheels, right? They're making the money. Oh, the baby just. I was like, wait, what's that noise? The baby's gone. So yeah, yeah. But anyway, VIX higher. Let's see what we would have had at the opening today. Let's see. All right, there we go. So it looks like at the 9:30 open today, we did pull back to a level at the 61.8. I mentioned. I mean, is it pulling back for an immediate push? Sure. Is the data supportive of the markets going up? It's great data, but it's not great data at the same point. And again, I mentioned this earlier. The immediate response, and let's see if we run it from the top side. Like I said, it wasn't. I was looking for the push off of here. We ended up not getting it. I was looking for that rally up. Question is, let's see. Yeah. So 50% traders would have definitely gotten stopped out. Again, there would have been our supply zone kind of wedged between those two. They would have got stopped out. And then again, when it came down, like, yep. And then they got stopped out again. So Overall, it is negative. We were looking for a bounce, and we didn't make it. Unfortunately, it did skyrocket off the open as everybody saw that number. It was like, "This is awesome! This is the best!" And immediately turned and rolled. And yeah, it rolled at 10 o'clock. So it didn't quite hit a 50%. Any 50% traders, again, we kind of had a small zone there. Um, it ended up going through the top of the zone anyway. But off, all those 50 percenters, man. I guess actually, let's see. Nope. Let's see. 61. Let's see if the 61 eighters, because again, you can always change your percentage to make it beneficial for you. I mean, I guess they typically people won't use those two, but what's the ATR? Uh, 7 points. Yeah, I don't know. Right now, I would say ES down. Reason why is because the data was just way too good this morning. So, but we'll see. It's 10:30. Maybe we find a base here. But overall, I guess the intonation is more negative than anything else. But again, off the open, there's kind of where we're bouncing right now. So not surprised, but like I said, was hoping this would not have been an entry for me for the open. So 0-1 right there. NQ. NQ looks like it did tag our area. So again, we drew this level here, talked about the base. It did pull back. And again, there's your 915, there's your 930. And look at that. It hit my 1460. Okay. With the Nadex presentation. So again, this would have absolutely hit because again, that's what we drew this morning, talking about that level at the open. We saw an immediate push because again, the data was great, but we'd see a reversal. Um, it looks like you would. We again, I didn't. I said that the 1460 was a target. I wasn't able to draw the zone up top. Um, so yeah, so we're 1-1 right now. NQ. Let's see what we got. These guys. Uh, yeah, Apple found buyers here. Right at the open. Apple found its buyers. Question is, can we slice through? I'd say Apple probably could. If this is its pullback now to kind of get the, again, impulse correction. If we can break through these highs, 173 on an impulse move again, or I'm sorry, 173, 175 is in the works, and that should help propel it higher. And Tesla, same thing. Look at this. We pulled back down again to where we closed for that gap. Um, again, drawing. There's your overnight level of basing, and we pulled. We gapped up. We pulled back down. We grabbed it, went higher again. Impulse correction. We start to slice through again. NQ should be able to gain some more ground again. So, but yeah, so we're 1-1. YM. Ooh, YM did not have the. Well, I guess it did have the kick. Let me go to the 15. Yeah, it did have the kick. Unfortunately, YM started up here. Yeah, it went down and came back up again. A little sloppier in the YM, and you can see it actually went right past the zone just by a little tiny bit there. So I don't want to candy coat that one, but it was pretty close. I mean, it opened up top. It did not actually meet the entry. So ES definitely didn't do it. NQ definitely did. YM, maybe. I mean, again, like I said, we did get the push right off the open, but whether you got stopped out, had you used this with Nadex waiting for something down here, you would have been okay. Um, actually, now I'm curious. Let's see. Let's see. Cost spreads, indices. Let's see. Get on the 15. Yep. Yep. Looks like you did. Yep. It's across. Come on, go into a window. There we go. Dropped it down to a 5 minute so we could see. Here's your 930 candle. So we opened at the very, very floor of this one as it went down. Here, I'll draw it on this one. Here's your 15 minute. Again, we drew this earlier. Talked about there being the base, right? We talked about that this was the bigger one. And again, there was the smaller one from 1:30 a.m. Right? That is here. So there was the bigger one. Here was your smaller one, right? In the overnight, right there. And you can see we opened at it, and we always talk about opening at the floor, right? There's the floor. And again, let me drop down to 15 minutes. So again, there's your 9:30 candle right there. Okay. We opened, and again, I'll move this back just so you can. Right. There was your floor at the open. There's your spike down. There's how to get your cheaper entry. And immediately within 9:40, by 9:45, we'd already sliced. Actually, by 9:40, well, by 9:45, already sliced all the way through the top. Right. So there you go. There's your 15-minute opening base trade setup, even using Nadex. Um, yeah. So 2 for 3. Right. 2 for 3. And let's check out the Russell. Um, Russell also 9:30. We talked about the level here, and this one obviously was a good one too. 9:30 candle was right. Actually, it looks like right there. So again, you guys can see the same type trade. And then we pulled back up and it went negative, and actually it bounced off the second level and continued to push lower. So I think Russell today, Russell will probably be a bit more choppy than anything else, but I would say that um, again, I think Russell's extremely dangerous because one headline about raising interest rates or anything like that, I think Russell takes a tank. And again, it went up, it grabbed things. Again, if you wanted to really talk about this one, there'll be experts. The experts. Oh, look at that! It hit the 50. Well, you were already in from here, and then it came down. And then did you do it a second time at the open? Maybe. I mean, it didn't break a Globex, so you could have drawn something up there. So yeah, maybe. Um, um, you know, Again, we were going long. Russell, 50% traders were going short. So could that have been your target? Sure. You would have tagged your target dead on. But yeah. So 3 for 4 today, as far as the 15-minute goes. ES was the one that just unfortunately did not hit. It was already, you know, kind of in a level, kind of not in a level. So it would have been here. Actually, this one did go. Was it NQ that didn't? Actually, did ES go? ES did go. I'm sorry. Yeah, ES did go. What was I looking at then? Yeah, ES did go. Well, I guess no. I guess it didn't on this one. Yeah, that's the new level. Yeah. So ES did not go. And again, if you done the basing from the open, that's what we're bouncing off of right now. So for a 10:30 reversal. All right, I was gonna say I was like almost positive. I was like, wait a second, why the heck are we? There's your 1 to 3. So all right, so some fun today. And like I said, showed you guys, definitely how you could have traded that on late X today. Yeah, I wish I had free time to be able to throw that class out. Like I said, the plan is that there will be actually the two ideas for the next two classes. I already have them, right? One of them is the 15-minute opener. How to trade it through both futures as well as with Nadex. Primarily, probably leaning more towards just the Nadex side of it because people are like, "Hey, you need another Nadex class." I'm like, "All right, fine, fine, fine." But then also there's a reversal class, the 5:30, 10:30 reversal class. So yeah, but I wish I had more free time, but I just don't. Spring is always so rough. It's sick kids. It's driving me crazy. All right. With that said, we're a little bit late today, 10:37. Let's go ahead and do the drawing. We got 8 people in. Briggs won yesterday, so again, Briggs is going for 100 today. Everybody else is going for 50 because again we missed Monday, so we just carried forward one. Who do we got in here? Ernest is in there. Neuro. Got Will. I think we got all the usual suspects. Not as many as yesterday. Ecky's here. Carol. Who are we missing? I feel like we're missing somebody. I'm drawing a blank. Oh, Debbie's here. I guess everybody's here. All right, let's close it. All right, winner of today's drawing. Let's see if Briggs goes for number 2. Let's see if Neuro stops him or Neuro and Ernest, again, stop him. Stars versus no stars. Winner of today's drawing is Briggs. Look at that. He gets 2. All right, let's see where he is. I know you were on number 2 here. Right, Mitch was ahead of you. Let's see. Oh, you get your 100. There you go. Back on the top because we know Mitch has 400. There you go. Look at that. Bumped Mitch. So good to go. All right. And again, Vanessa's not here, so you should be able to overtake her. And then I don't know how the restream bot is getting points, but the restream bot is getting points. Interesting. Not sure how the restream bot works, but God forbid the restream bot. I'm about to zero the restream bot out, but yeah, interesting. All right, so right now, like I said, everything is basically flat. Dollar CAD, I think, is really where we're looking to short tomorrow morning. Again, based off this Canadian data, drop of the unemployment rate should be pretty decent. Look for the European session. Some reversals out there. Gold, silver, kind of confused. Again, 3 for 4 for the 15-minute opening setup today. Again, it called that initial pop, and then with everything crashing, again, is what you expect. Retail trader sees a green number, they say good, they hit buy, it goes up, and immediately turns, rolls right back down again. But it was actually in levels ahead of time. So again, pretty easy today, and then again showed you how to, showed you how to do the seat at the table. Yep. Don't make me start posting all the program stuff again. Love that movie. All right, I'm out of here. I'll catch you guys tomorrow. Everybody have a good trading day and take care.